And that means that we have a 12-day stoppage from Christmas Eve through to the 4th of January, which eats up about half of the production month of January. And of course, if you lose half a production month, then it impacts the entire quarter. And this is a seasonal thing. It's expected. And what's important is that we get back to our stride as soon as we can, and we've done that. So that's why it's 850,000 ounces. But on an annualized basis, as we stand today, we're back to the levels we should be. But it's the first 2 weeks of the first month in the quarter that is a planned outage, if you like, because people are away. We have a lot of migrant labor and they want to go home for Christmas. And what I'm going to do this year is something different. We're going to look to work in those shifts and then carry stockpiles or make sure that we can carry more gold in solution and then ameliorate the impact of this. It's been particularly hard this time around because we've also had some safety stoppages towards the back end of the quarter. So we didn't go into the quarter with the kind of stockpiles on surface we would have liked. So the impact is always there, but the impact this quarter is a little bit worse than what we've seen in previous quarters.
Now, of course, you do say in the commentary that you're on track to produce 1 million ounces a quarter. You also mentioned some of those measures you're taking, such as introducing a 6-day working week to try and build up those stockpiles. How are those negotiations proceeding?
They are currently happening as we speak, and I don't know if and when we're going to get to a resolution, but why I'm mentioning it specifically is I believe that the sustainable solution to these ore bodies is they've got to be worked harder, and we've got to get people to the face more often. And we've got great ore bodies, they're long life quality ore bodies, we've got good infrastructure around them, but if you don't mine them at the optimal rate, then they're not going to be sustainable. So it's got to be done safely. We don't want to work people beyond the legal hours that they're required to work, so we'll have a roster arrangement. And what it does do, it helps us to deploy people who are currently misplaced or excess to the business. And that way we can avoid having spillover effects on people's jobs. Much better to try and deploy those people into productive gold winning, preserve the jobs, and it's a win-win solution. That's what we're trying to get to. If we're not able to reach agreement on that, we'll have to assess how else we're going to sustain the operations. We're also talking to the government about whether there can be different protocols put in place for how we look at safety stoppages and what have you, and I'm hopeful that we'll try and get something out of that too on top of this.
Of course, when you chat to analysts, they're mostly excited about the South Deep mine, and production at that mine was up 10% due to higher underground volumes. Also, as that mine builds its production base, you say on track to deliver 300,000 ounces for this fiscal year. Of course, the longer term target is 600,000 ounces. What sort of progress is being made towards that target?
In fact, the long-term target is 800,000 ounces. That's the target we've given and we haven't changed. We've just gone onto full calendar operations at South Deep, which for a large bulk mechanized mine is in line with the standard that's applied across the world. In fact, if you go to underground mechanized mines in Australia, you'll find they're also on Fulco. That is a good step forward for us to get an additional 25 to 30% time available to put our assets to work, make sure that the equipment is being fully utilized. You know, so I would see that South Deep over the next year or so should be targeting somewhere between 300,000 and 350,000 ounces this year. And if you look where we were in 2008, in 2008 we produced, 2009, I beg your pardon, we produced 175,000 ounces for the year. This year we're going to produce 300,000 ounces. That looks like a good bet. And in 2011, I'd like us to get to somewhere around 350,000, 360,000 ounces. So we're moving up steadily. The next big milestone for us is to get the deepening of the ventilation shaft finished and have that equipped. And that's scheduled to be done by July 2012. And that will create a shift change in this operation as we start moving further up the curve. So between now and then, incremental increases, and then another step change when the vent shaft's in, and we'll gradually move up to 800,000 ounces by 2014, end of 2014 calendar year.
Nick, just looking at costs going forward, of course, your cash costs were steady in rand terms over the quarter. Of course, this year we do know we're getting a significant rise from Eskom. We don't know the extent of that rise. Could be as much as 35%. How does that change your cost profile going forward? And do any of your mines become unviable with those price increases at a current rand gold price?
Well, it certainly puts the viability of some of the higher cost shafts into question, and it'll mean that we'll have to reevaluate some of those lower marginal cost shaft systems. The thing that we don't know yet is what the knock-on effect of that might be. If there is a 35% increase in power in this country, what is it going to mean for all of the other products which have a significant power component in their costs? For example, steel. We know steel has around about a 20% power component. I don't know what that's going to mean. It might be somewhere between 5 and 10%. So we're going to have to see what that means for us. I don't have all the answers today, but I'm extremely worried that if we go ahead with 35% for 3 years, which is 145% cumulatively over 3 years, that we might find the whole industry is under threat. So I've made presentations myself to the regulator, and I'm hoping that we come up with a sensible alternative that doesn't cripple the income-earning assets of the country.
Now, of course, Nick, you can't forecast the gold price. We did see record dollar gold prices in the December quarter, obviously helping your profits in that quarter. And just looking at some of the drivers of the gold price going forward, we have seen rising investment demand from ETFs. Of course, we have seen rising global volatility, which has also supported the gold price. What do you see supporting the gold price going forward from here?
Well, I believe that the investment thesis for the gold price is premised on increased investment demand. And what we have seen in 2009 is that gold has again re-emerged as an asset class within investment portfolios, and a number of funds that weren't overweight or even having any gold in their portfolios are now jumping in, getting some gold. And it still represents less than 1% of total global funds under management. Gold in whatever form, equities, ETFs, physical, etc. So it's not going to take a lot of incremental investment to see gold supported again for possibly the next phase. We don't give predictions, as you know. The supply side, I think, is going to continue to decline, the primary supply side, that is, mine supply. And if you're seeing continued investment demand, then we've got a reasonable chance, I would say, of the current price of gold being underpinned for this year. And who knows, maybe it can go higher.
Nick, of course, you were busy preparing for your results this week. Of course, we had the mining minister, Susan Shabangu, at the Indaba, the mining Indaba in Cape Town, reaffirming that there would be no nationalisation of mines, at least in her lifetime. And of course, this follows a lot of noise coming out from the ANC Youth League. Do you take some comfort from what the mining minister said as an investor in the South African mining industry?
Yes, I do. I don't think this is an event that we should spend too much time worrying about. The pragmatists in government, I think, can see the picture, and nationalising the industry, I think, is going to be the death knell. I don't believe you're going to sustain the industry if you do that, and I hope that she continues to inform the public of her position, and that she gets supported by the rest of government. There's many different ways of creating value for people other than nationalisation. And nationalisation, I don't think, is going to create value. There's much greater ways of creating value for people, and that's part of our whole sustainability program going forward. And we're trying to do a lot of things that not only satisfy our own investors' requirements, but also the country's requirements, training people, and making sure that when people leave our employ, for example, they might be equipped for life skills to tackle other things. And there's much better ways of providing those opportunities than nationalising the mines and cutting off the very lifeblood of revenue to the fiscus, creation and maintenance of jobs. So I think we've got to get away from the noise and find out exactly what people want and how we can accommodate them within the existing model. That has got to be the best way forward.